Welcome back. This is the Rise and Fall Trading Hub, and I'm here with another part. I'm here to give you another quick strategy for the rise and fall, or for Forex, whichever kind of trading you are in, as long as it uses candlesticks. This will be beneficial for you. So our strategy today is called using the three white soldiers. Three white soldiers. That's what I want us to look at today. This pattern is not very common, but once it appears, the chances of winning are so high. So it's a good strategy. So let's look at how it forms. That is the three white soldiers. So a few things to note on this is that number one, this one is a bullish strategy. In other ones, once you spot the three white soldiers pattern, then you know that the market is about to become an uptrend, which means this one works best after a downtrend. So there has to be a downtrend first, and then after that downtrend, if you see the three white soldiers, then you know that the market is about to reverse. So it is formed just like the name, it is formed using three candlesticks. So in this pattern, what happens is that after a downtrend, so there has to be a downtrend first, and then after a downtrend, once you see a bullish candlestick form, and then followed by another bullish candlestick which opens within the body of the first one, or where the first one closes. Good situation is this one. So there is a downtrend. The first bullish candlestick forms, followed by another that opens within the body of the first one, or where the first one closed. Then followed by a third candlestick which continuously grows. It closes on the upper side, it closes higher, just like this. There is 1, 2, 3. So that means if we enter our market after the close of this one, immediately after the close of this, then we can make some profit. So what you do is immediately this one closes, you enter a market, and remember from the other parts we said you use twice the time frame. So immediately this candlestick closes, so we would trend using which candlestick? Let me show you. You would trend using this candlestick here. That is the candlestick you are going to use. So you enter a trend 10 minutes time frame, and in 10 minutes, of course, this one would be a profit. Now, what the three white soldiers mean is that if you see this candlestick, and something else, by the way, I have not told you, is that these candlesticks should be the normal candlesticks. It should not be the small candlesticks or the candlesticks with so long wicks. Don't look for candlesticks with long wicks. Don't look for candlesticks with long wicks or small candlesticks like the donji candlestick or the spinning top or all that. Just look for a normal candlestick with a big body, a small wick, or even no wick. Even if you get a marumbozu candlestick, then better. A candlestick like this one, then better. So once you spot this, though it doesn't happen very frequently, but once you spot it, then know that you will be profitable. So this one is a bullish strategy. It shows that the market is going to reverse after a downtrend, and so if you enter a trend, you are going to emerge profitable. So let me look for another situation where we hand this another example. So we have this as an example. I don't want to take this as a very good example, though it is also showing 3 bullish candlesticks after a downtrend. But why I'm saying this is because this third one is so small, so they should be at least same size or maybe increasing in size beginning from this one. So that one is, it's not a very good example, and we said you have avoid forcing the market, just trend as the market is. Okay, let me look for another situation. That is V50 1S. So let's try another one. It has to be formed after a downtrend, not anywhere else. Of course, you may see these candlesticks forming along the trend, but for best results, always use it where there is a downtrend, after a downtrend. So if there was a downtrend, or even after consolidation, sometimes it happens after consolidation. I hope you know what that means. So if there is a breakout after consolidation, it can also be a good entry point. So don't enter in a situation like this, because there is no downtrend here. There has to be a clear downtrend or maybe consolidation. Good. Look at this one. Looking at this one, this is also a good example. It's also a good example. So what happens here is there's a slight downtrend here, and then there is this candlestick, this candlestick, this candlestick. So we would have entered a trend after the close of this. Then this one is a sure profit. So this one is also an example of 3 white soldiers. I think by now you've known how to look for these patterns. Even if I don't teach you another one, maybe in case you need a book or a PDF that has all these candle patterns explained and the types of candles, then you can write to us using the email in the description, and I'll share it with you, of course, for free. Now this would not be a very good example. Why? Because though there is a downtrend, this candlestick has it's a small candlestick with a long wick, so avoid such situations. This works when we have big candlesticks with small wicks. That will mean that you will be profitable. So by now you know how to enter a market using the patterns that I have shared with you previously. That is the piercing line, the dark ground cover, the evening star, the morning star, and the engulfing patterns. So you enter the market just like I have explained in all that. So just go ahead and try that and see how it goes. You can give feedback. Thank you so much.